Hey there, it's Jonathan, or J-Rod for short, here for Rich Retirement TV, and today I want to talk to you about my 5 favorite tech breakouts right now. But before we get into today's breakouts, I just wanted to kind of give you a refresher on what breakouts are and why I love them so much. When you're looking at a stock chart, you'll notice that a stock never moves up or down in a straight line. And everything really that you're seeing on a chart comes down to support and resistance, right? And those are the points at which a stock kind of pauses as it moves up or down. And really, a breakout is where a stock breaks through resistance. And the more times you see a stock test through a level, be it a price point like $10 or $15 or $20, the more times you see a stock test that level as it breaks out. When it breaks out to the next level, you see that support or that resistance become support. And to me, breakouts are the safest way to play stocks, because once a stock has broken out, it's proven to the market that it's got what it takes to move to the next level, and you see that support kind of become resistance. And you can really think of what I'm talking about here like a multi-story building, right? Each floor that you're on has a ceiling, and that ceiling is the floor for each story as it moves up. As you're building that building, you build from one floor to the next. So that's how a rally kind of builds. And I love these breakouts because as you can use that breakout level as a really good entry port, especially when you see it becomes support. But so that's a quick refresher on breakouts. Let's go ahead and take a look at my favorite breakouts right now. All right. Oh, there we go. All right, so the first breakout on my list is Avaya Holdings Corp. And they are a cloud-based digital communications company. And they come straight from the Lifetime Income Report 5G Index. They're a really, really solid work-from-home name. They've got a key partnership with a company called RingCentral that specializes in what are known as soft phones, basically computer-based phones. So like myself, I have a desk in the office at St. Paul Research, but because of the pandemic, I'm not there. So we have these soft phones that are facilitated by RingCentral. So it's my work phone is now connected to my cell phone, and I can make calls from my cell phone, and they'll go out as my soft phone, and vice versa. So it's really, really versatile. It makes it easier to communicate with my team members, and also, now I don't have a big old phone on my desk taking up however much space. It's really convenient, and a lot of companies, not just mine, have moved into these soft phones and utilized Avaya's technology. They power call centers around the world, and they're really replacing phones in big companies, from all across the country. But they reported what I really like about Avaya. They reported earnings on Monday. They crushed estimates on the top and the bottom line. And as you can see here, really nice breakout. Let me put my 2-line in. Nice breakout here. But here are the 3 things that I absolutely love about this stock right now. As you can see here, I've got a line highlighted around $15. That is that's the key resistance level. And this line right here, these two lines create what's called an ascending triangle, and that's where you have a stock that's pushing up against resistance here. But each time, you see it's as it pulls back, the stock holds this line really nicely. So you see rising level of support against this overhead resistance. And the breakout here is massive on earnings, just massive. And as you can see, well, you can't really see it too much here on this on this chart, but the breakout itself is also coincides with a heavy volume day, so a lot of buying pressure to take the stock over that level. And so I love this pattern because it signifies where you see that rising support, you see that more and more buyers are coming in to the stock as it as it rallies higher. That's really, really bullish. And you take this pattern here. Just you can easily trade the pattern. You take the $15 price level and the bottom of the channel here around $7, and you can take that range, which is roughly $8. You can apply that to the top of this breakout to get yourself a price target, which would be $23. That's about 24% upside from where the stock is trading now. But I also love that, as one thing out of three, what I also love about this stock is that it not only broke out of this kind of near-term downtrend, but it also broke out of a longer-term downtrend channel. And let me pull up my channel here. There we go. You take a look here. You see the stock has kind of moved in it like in a downtrend, meaning a series of lower highs and lower lows. However, you take a look closely at just the last couple of weeks here, and you're looking at a weekly chart here of Avaya. You see it's broken out of this downtrend channel as well. So you've got that $15, the breakout over that $15 resistance level, and you also have this downtrend break. That's very strong change in the trend here to the upside. And finally, what I really like here, let me turn off my trend channel. What I really like about this stock is that you take a look at this blue line here. That's the 200-day moving average. That's your long-term trend indicator, right? You see that downtrend confirmed in this blue line. But as you see here over the last, say, 4 months or so, the long-term downtrend has flattened out, and as you can see right here, it starts to turn upward here. Actually got a little bit of a lift here. That's telling you that the long-term trend has shifted as well. So you've got a near-term breakout combined with a longer-term downtrend breakout. You've got a lot of bullish momentum pushing this stock forward. And I see you can the stock can easily make a run here at $23, which is that ascending triangle breakout range. Make its way, back to those longer term highs or even higher. Again, this is a key work from home name. And as we get into the colder part of the year here in the United States, very good chance that folks are continuing to work from home, and the vacation season will be over. So you'll have a whole lot of room for Avaya to grow. And again, that's Avaya Holdings Corp, ticker AVYA. All right, so that's one breakout. Let's go ahead and take a look at my second breakout. All right, so now we're looking at HPQ. That's the ticker for HP Corporation. You probably know them. They're one of the biggest computer hardware manufacturers in the world. Another big work from home stock, as people are working from their home offices. A lot of folks are upgrading their gear, or they're having corporate gear shipped out to their houses. New hardware that's secure, that works. You can't have people not tuning into conference calls or checking their email because their computer's jacked up. So HP is seeing kind of a renaissance where you've kind of seen a downtrend in computer sales that is flattened out, and it's rising again. So HPQ reports earnings on August 27th. If you're into history like I am, the stock has beaten earnings estimates in 6 straight quarters. So you've got a track record here of outperforming expectation, and the stock typically rallies kind of around those breakouts. But the two things I love about this stock right now, again, you see just like with Avaya, a strong ascending triangle pattern. I love this pattern. You see here that kind of that resistance here around $18 and the start of the channel here. Let me pull the triangle pattern here right around 13. See, you got the start here 18, 13. So it gives you a $5 range. And as you can see here, just over the last couple of days, the stock breaks out above this triangle level, and that the top of this resistance here is just right along the line of that 200-day moving average. So you got a breakout here of that ascending triangle pattern as well as the 200-day moving average. So it's very strong signal of momentum here. As you can see here, the 200 days flattened out. Another really good bullish indicator of trend here. But the other, so in terms of price target, again, you can take that $18 to $13 range, which is $5. Apply that breakout range to, or that range of trading to the top of the breakout there, and that gives you $23. So that's some 20, 24, 25% upside from where the stock closed now. But the other thing that I really like about this stock right now is, let me put back on my, there we go, put my 50-day moving average back on and get rid of these breakouts. Cool. So you take a look here. I love this pattern. This is like an accumulation pattern here where the 200-day moving average has flattened out after a period of downtrend. And remember, that's the long-term moving average for the stock. And you have the red line here, that's the 50-day moving average. You see here a flattened 200-day moving average and a rising 50-day moving average, and price breaking out above that 200-day. So when you see the 50-day moving average here, which is a shorter term average, basically measures about a quarter's worth of activity. When you see that kind of rising, it's telling you that the trend is turning. And you can just look at the chart and see that after HPQ tops out here around 23, slams down to 13, a $10 drop in just the course of 2 months. Thanks, COVID. But you see the stock kind of rebuild here and make its way higher. So you're seeing that kind of curved action here. But in any event, this is a great period to get into the stock, because not only do you have the 200-day moving average as support, but you see this 50-day moving average become support as the stock kind of rallies higher here. So you've got two levels of support on top of the ascending triangle breakout right there around $18. So you got three key areas of support. You couldn't ask for a better setup in terms of entry point here. So again, HPQ, really great tech breakout right now. I like this stock to go back to, I think it can make a very spirited run back to $23. And if you break out above $23, your next price target from there would be $33 if you take that $23, this $23 top here, and the $13 low here on the year. Again, a lot of upside there. So that's HPQ, and let's go ahead and take a look at our last ticker, ACIW. And if you haven't noticed by now, there are some similarities here to each of these charts. Just like HPQ, we have a really nice looking ascending triangle pattern. We've got $30 here as the top of that triangle, and then we've got $22 roughly here as the bottom of that triangle. So that gives you actually, excuse me, $21. That gives you a $9 range here. Again, you apply, that gives you a $39 price target from where the stock kind of breaks out here. So that's one of the three things that I love about this stock. The other two things, actually, before I start diving into the breakout, I should tell you a little bit about what these guys do. ACI Worldwide, they're a financial payment software company that they basically, their software speeds up the transaction processing time between banks and merchants. And as you can imagine, with a lot of folks being at home or even just kind of moving to a more, an online shopping environment on the go, especially mobile, we have to be able to make those transactions securely. And we have to be able, if you're a merchant, you have to be able to clear those transactions quickly so that you can get paid. And then as a bank, you want to make those transactions, make that money move as quickly as humanly possible. Again, as 5G rolls out and the speed through which at which you can make payments is going to increase. So we've got to get that processing time down. I mean, it's in some cases still a couple of days, to clear a transaction. Time is money, folks. We got to speed that up. And ACI Worldwide is one of the big names that is working on that space. We've looked at two work from home stocks. This is kind of a shop from home stock, or shop from wherever you are kind of stock. So again, we took a look. One of the three things that I love about this stock is the ascending triangle pattern here. The second is that the company reported earnings, big breakout here after earnings. So again, the second thing would be a big post earnings push here. You got a strong breakout, on earnings, and that breakout is accompanied by very strong buying volume here. So you got a big inflow of money here around the earnings, and it helped fuel that massive breakout above the ascending triangle top here. The third thing I love about this stock is this accumulation pattern showing up again. Let me pull out my ascending triangles here quickly to help highlight it. So again, you've got the stock kind of in a downtrend over a course of, let's say, basically for the last year or so. The stock's been kind of moving in a downtrend, but you see here the 200-day moving average, that long-term trend average here, start to flatten out. You see the stock retake its 50-day moving average, which is this red line here, the shorter-term moving average, and that 50-day is acting as support for the stock. So as on the breakout, you see the stock not only slam above the top of that ascending triangle pattern, but also above that 200-day moving average. So just like we've seen before, you've got the ascending triangle top there as potential resistance or support there. You've got the 200-day moving average there as support, as well as the 50-day moving average. So you got three key levels of support for you to take an entry in this uptrending stock here. And again, you take a look at the upside potential here. You take that ascending triangle pattern. It gives you a $9 range. Apply that to the top of the breakout here, which is right about $30. That gives you a $39 price target. Let's call it 40 to be even, and that gets you really to a new all-time high for the stock. And in the end, there's going to be, you take a look at the market that ACI is in. There's going to be no shortage of financial transactions to clear. Be it folks, shopping from home or shopping on the go mobile. This is a growth market. All three of these companies you looked at today are in growth markets, and you're seeing the stock charts confirm that action. But again, when you're looking at stocks you want to get into, taking advantage of breakout points is the safest way to do it, because those resistance points where the stock has a hard time breaking through, once they break out and prove to the markets that they have what it takes, those resistance levels often become support, and they give you that chance to get in and ride the rally higher. So again, the three tech breakouts, excuse me, that I love right now: Avaya Holdings, ticker AVYA, computer maker HP Computers, and finally ACI Worldwide, ticker ACIW. So thanks so much for watching today's video. I love doing these for you, and breakouts are one of my favorite patterns, especially the ascending triangle breakout. But if there's anything in particular that you want to see in a future Rich Retirement TV video, please leave me a comment there in the YouTube section. Subscribe to the Rich Retirement Letter YouTube channel. And we'll have another one for you next week. Thanks so much. And for Rich Retirement TV, I'm Jay Rod. I'll see you next week.